for business people.
Good morning. You're watching All You Need to Know on Bloomberg Quint, India's first digital live streaming news service. I am Jayesh Khilnani. Alongside me is Agam Vakil to take us through the futures and options space. But first, let's have a look at how the US markets closed and what kind of handover are we looking at from the Asian space as well. Well, the US market, mildly positive cues coming in from all three indices. The Dow Jones climbed just about 2 points, the Dow Jones climbed about 30 odd points, and the Nasdaq Composite climbed about 3 odd points. So, last few days we have seen that the handover from the US has not been that positive, or, we are not getting many cues on account of the holiday season. But moving on to the Asian markets, all the Asian markets are back in action after the holiday season, and we are looking at the Nikkei, which is trading mildly positive with gain of about 8 odd points. Hang Seng has done really well, which is seeing a gain of about 90 points or 0.3%, while Shanghai has, slipped into the red with a decline of about 1/10 to 0.1% or 5 points down. As far as the SGX Nifty is concerned, it is indicating that we are likely to start the Indian market at above 10,500 with a gap of about 20 to 25 points. But moving on to the other asset classes, we have seen that oil prices have slipped below the 60 mark after gaining about 2.5% the day before. As far as gold prices are concerned, the gold futures on COMEX have hit a high of more than $12.90 for an ounce, and gold prices have actually climbed to a 1-month high. The base metal space resumed trading post the holiday season, and we saw that the LME base metal index actually climbed 9 days in a row and was up about 1.6% for the day. As far as currencies are concerned, the dollar index touched a 3-week low, and it has now slipped below the key mark of 93, which is also boding well for the gold prices, which we saw earlier. The other constituents of the dollar index, we saw that the euro gained about 16 basis points, while the pound climbed about 12 basis points. The rupee, however, has depreciated to levels of about 64.155. Now, the flows picture that we got from the FIIs and DIIs, there's a reverse in the pattern that we were seeing consistently. So the FIIs bought nearly 172 crores in the cash market, while the domestic institutions sold about 200 crores in the cash market. But for the month, the trend remains intact. FIIs have been net sellers to the tune of about 6,500 crores, and the DIIs have pumped in nearly 8,500 crores. As far as the recap for trade of yesterday is concerned, we saw that the Nifty was trading largely flat for better part of the day after a sharp sell-off in the last hour of trade, and ended down about 40 points. Now the other indices. So we saw that the VIX index climbed about 3.6%. Now this is the second day running that we have seen the volatility index come back into action, and now nudging the 12.5 mark. Agam will talk more about that. As far as individual sectors are concerned, pharma clearly led the way with the index climbing about 2.4%, and Sun Pharma, which was the stock of the day, climbed about 6.5%. As far as the losers are concerned, the banking stocks and the energy space did not do well. So 0.7% and 0.8% lost from both those indices. As far as individual stocks are concerned, Sun Pharma, like I was mentioning, contributed 10 points to the gain of the Nifty, followed by Vedanta, Tech Mahindra, and Dr. Reddy's. As far as the losers are concerned, we saw that most of these are heavyweight names. So ICICI Bank, HDFC, Reliance, and ITC contributed to the downside of Nifty. But it's FNO expiry. Agam, what are the cues that you're picking up for the futures and option space?
Right, Jayesh. So, naturally we've seen rollovers pick up with the Nifty moving down by as much as 40 points. We're still just shy of the 10,500 mark. We've seen unwinding in the December futures, but a lot more accumulation in the subsequent contracts. Similarly, for the Nifty Bank as well, we have seen some amount of unwinding with the index also falling by as much as 0.7%. That said, the VIX has moved up by as much as nearly 4%. That stands at around 12.5, and the rollovers have picked up, as I was suggesting earlier, currently standing around 51%, and we will wait and watch as to how this number pans out as we move into today's day of trade. But the Nifty put call ratio currently standing at 1.59. That remains unchanged. In terms of changes in open interest as far as options go, what we've seen is a lot more activity in the 10,500 calls and puts where unwinding happens to be, and we've seen 10,600 put see more accumulation of open interest, so that can perhaps provide a resistance in today's day of trade. Moving in, we are watching out for Reliance Communication and TV18 broadcast, which moved into the FNO band, and of course Cummins India, or rather Adani Power, which has seen fresh longs building up. If you take the open interest accumulation across all series, that's where we've seen positions build in, with the stock also moving up by as much as 3.5%. That said, in terms of what we're watching out for today, we had Mohnish Pabrai investment funds. He says that while he has seen handsome returns from his investments in Rain Industries, he still sees more upside on the stock. Here is a small portion of that conversation he had with the Neeraj Shah of our special series, Alpha Moguls.
Let's take the classic case of Rain Industries. Now, you've bought it way earlier. This is not a recommendation from Mohnish Pabrai by any stretch of imagination, but I just want to know, it's an investment that has compounded well for you in a short period of time, but it's given you maybe 8x or 9x returns already. So it's been the compounder that you would probably seek. Most people would be happy with a 10-bagger, a large 10-bagger. You've gotten one. How do you know that this is not the time to get out of it? Are you giving the leeway to the management, or are you studying the cycle of that business so well enough that you believe that there is more in store?
Okay, so first disclaimer that my views may change tomorrow.
Of course.
Right, so this is a dynamic thing, and they're valid at this point in time, and it's the best what I can say at this point. So I think, first of all, Rain is interesting because after I bought it, for 18 months, it did nothing. And then, but this is the nature of equities, is they go through long periods of doing nothing and short periods when they do a lot. So even if you study markets over long periods, in the US, for example, from 1965 to 1982, the index, the Dow, was flat, 878 to 878, 17-year period, and the US grew a lot in that period. Then from 82 to 99, it grew a lot. It went from 800 to like 12 or 13,000. So equity markets have this habit of not being smooth, right? And so Rain was an example, extreme example, because it sat doing nothing for 18 months and then, went wild and crazy, if you will. I had a certain understanding of the business before I made the investment. And most of that understanding was because someone sent me a very nice report on Rain, and it made it obvious. In fact, basically based on that report, the price I was paying for the stock in 2015 was likely to be the earnings of the company in 2018 or 2019. So I was basically buying in 2015 at PE of 1 in 2018 or 2019, and it was a profitable company. So anytime you can do that, you don't need to think about it too much. And so I thought at the time before I bought Rain that probably in a 5-year period, we might make somewhere between 5 and 10 times our investment. So it was a very obvious no-brainer type investment. I tried to buy every share I could. We'll see where we end up, but I think my sense is it's got some room to run.
Yeah, okay, but this is, remember, again,
but it's not a stock tip. Yeah. I wouldn't be buying at present prices, but I'm just not willing to sell at present prices.
Sure. I just wanted to know that buy and sell.
I would not recommend Rain as a screaming buy at this point.
stock of the day is Mahindra CIE. Motilal Oswal has initiated a buy rating on this counter with a target price of around 297, indicating a potential upside of nearly 19% for this counter. It says that the company now seems to be in a growth phase after 3 years of consolidation. The Indian business seems to be recovering fast, and the strong focused parental advantage also gets in financial discipline for the company. Along with that, acquisition of Bill Forge is also an excellent strategic fit for the company. The EU business, the European business mix optimization and operating leverage is also expected to drive margin growth. Strong earning growth along with your limited capex also works well towards the improvement in capital efficiency. They estimate a consolidated CAGR of around 8% in the span of over next 3 years, and the margins are also expected to expand by as much as 260 basis points to 15.1% by the calendar year CY19. About the company, well, it's a multi-technology automotive component supplier, a manufacturer of forging parts in India as well as Europe. Indian business contributes to around 38% of your overall revenues, and the rest is coming in from Europe. And it caters to some of the top clients like Mahindra & Mahindra, Maruti Suzuki, and Tata Motors, among others. With that, let's toss it on to Saloni and Jayesh for currency and commodity market update.
Thanks for that, Nikki. Let me start off with the base metal space, which has seen a rally come about for itself after resuming trade post the Christmas holiday. So the LME base metal index climbed about 1.6%, and it was the 9th straight session that it saw gains for itself. Now, copper was at the forefront, which actually clocked a 4-year high as the Chinese has halted the top producer to produce more of copper. It gained about 1.6%. It was the 9th straight session that copper saw for itself, and this is the longest winning streak since the year 2004. Lead, on the other hand, snapped its 4-day losing streak by gaining more than 2%, and aluminium gained 8 days in a row and was up nearly 3% in trade. The similar action can be seen from the Shanghai Futures Exchange, where most of these base metals are trading with a positive bias, except for steel, which is showing a downtake of about 1.5%. Moving on to the precious metal space, gold has hit a 1-month high. COMEX gold futures have climbed above the 1290 mark. What has worked in favor of gold prices is the dollar index, which has slipped below the 93 mark and now touched a 3-week low. As far as oil prices are concerned, we saw that WTI slipped below the $60 mark after the Libya production fell to about 1 million barrels per day. But the real factor to watch out for as far as crude oil prices is concerned will be the API report, which is likely to come out with crude inventory fall of about 5.96 million barrels for last week. But Saloni joins us to give us an update on the currency space.
So, well, Jayesh, tracking losses in the local equity and Asian currencies market, the Indian rupee yesterday slipped for the 2nd consecutive session and ended at 64.16 levels against the US dollar. Now, the home currency ended at 1-week low on the back of sustained capital outflows and a sudden spike in global crude oil prices. Now, on the global front, dollar index breaks the crucial 93 mark, and it now trades near the 3-week low at 92.90 levels in the early Asian trade. Now, the index has fallen close to 9% so far this year, thereby putting it on track for its steepest decline since 2003, when it dropped 15%. Conversely, the euro has been the best performing currency in this year, and it has appreciated almost 12% against the dollar in this particular year. Coming back home, dollar rupee is trading marginally higher by 5 paise at 64.10 levels against the dollar in the non-deliverable forward market, which indicates a flat to positive opening for Indian rupee. Moving on to bond market, the 10-year bond yield touched a fresh 17-month high of 7.31% yesterday early in the day, after data showed a slowdown in the tax collections under GST, thereby fueling speculations that will lead to higher borrowing by the government in this fiscal year. However, it erased all the gains by the end of the day, and it closed 6 basis points lower at 7.22%, while global funds decreased their rupee debt holdings yesterday. They decreased their rupee debt portfolio by approximately 320 crores according to NSDL data.
The market has been waiting to hear from the government as to whether it intends to borrow more than the budgeted amount in the current fiscal. Well, they got half an answer today. So the government in a press release said that they intend to borrow 50,000 more from the markets in terms of dated securities. Now, that would take the gross borrowing up to 6.3 lakh crore from the earlier targeted 5.8 lakh crore. So just on that number, this is the first time since FY12 that there has been a substantial increase in the government's gross borrowing program during the course of a fiscal year. The story, however, does not end there because in its press release, the government sort of confused the matter and said that they don't intend to have any net additional borrowings. And they said in explaining that that they want to see or they expect to see 61,000 crore in T-bills roll off. Now, a lot of bond market participants and economists that I spoke to were not clear on exactly what the government is saying because at the end of the year, the outstanding T-bills will be at least 23,000 crore more than what they had budgeted for, which was about 2,000 crore. So the gross additional borrowing actually works out to 50,000 in dated securities and 23,000 in T-bills. That seems to be the math that the market is working on. The government, however, says that there is going to be no net additional borrowing and no one is entirely clear how that is going to play out. But even if you give the government the benefit of the doubt and say that there will be no net additional borrowing, the bond market participants say that they remain focused on the increased supply that will come due to the higher gross borrowing, particularly the increased supply of longer dated bonds, which would mean that, say, the 10-year bond yield, which is the benchmark bond yield, that would continue to remain at elevated levels and even perhaps rise from levels at which it closed at in trade on Wednesday. So you had the yield go up to 7.3 and then it came down to about 7.22 on close. What bond market participants expect is that tomorrow when yields open, you will again see an uptick. What is also unclear is whether this borrowing math means that the fiscal deficit number of 3.2% will be maintained or not. Now, Aditi Nayyar of ICRA says that it neither confirms nor denies any fiscal slippage. Another senior economist that I spoke to said that if you look at the gross number, it suggests that there will be considerable fiscal slippage. But again, until the government actually comes out and clarifies its position, there remains some ambiguity. But the net takeaway from this particular release is that bond yields will remain high. The bond market remains worried about increased supply of bonds and also the fact that next year could be a tough year to meet fiscal deficit numbers.
Amongst the stocks that we're tracking today morning is Kolte Patil, where the company's Pune township, which is developing a 383-acre township in Hinjewadi in Pune, it has signed a 193 crore agreement with PE firm KKR. Now, they've said that the township project will utilize the funds from this investment to attain financial closure at the R1 sector, be able to meet working capital requirements and also bring down the cost of the outstanding debt which is attributable to this project. So do keep an eye out on Kolte Patil. That apart, we're also tracking SBI, where the board approval came in yesterday to raise up to 8,000 crores via additional tier 1 bonds by March 2018. Remember, this is in addition to the 15,000 crores that the bank had raised via QIP in June. So that's SBI on the back of fundraising plans. After that, another stock that we are tracking is Mohnish Ispat. Now, you have a ET report which has said that Aeon and JSW Steel have filed a 3,500 crore resolution plan for Mohnish Ispat. They've said that the plan involves paying 2,500 crores to lenders and an equity infusion of 1,000 crores. Now, remember, they were said to be front runners for Mohnish Ispat. So now they've gone ahead and submitted a resolution plan, and that's what the report, ET report is saying. And lastly, we're also tracking a smaller company called Star Cement, where they've received 158 crores in capital investment subsidy from the center. So you might see some reaction there. So those are some of the stocks that you need to track in trade today.
Market regulator SEBI has asked Axis Bank to undertake an internal inquiry with respect to leaking of unpublished price sensitive information on social media platforms like WhatsApp. The information which has been leaked pertains to the first quarter earnings of the bank, which was released on July 25th. SEBI has been investigating a series of leaks which have come out after news reports that nearly earnings of 12 companies were found in WhatsApp groups ahead of the announcement to the stock exchanges. The regulator has asked Axis Bank to look at all the processes and people involved in formulating the earnings, including people who are involved with respect to calculation of gross NPAs, net profit, or slippages of the bank. The regulator has asked the entire investigation to be completed within 3 months and submit the report within 7 days of completion of the internal inquiry.
Well, some more stocks to watch out for from the cash market volume as of yesterday. First up, we have Sun Pharma. It was up more than 6.5% yesterday and saw delivery buying in excess of 400 crores. The delivery volume surged about 120% at 72 lakh shares as compared to its 5-day average, and the total volume jumped about 200% at nearly 2.5 crore shares as compared to its 5-day average. Rallies India, the other stock to watch out for, it gained more than 4% yesterday and saw delivery buying of 74 crores. The delivery volume surged 166% at about 27 lakh shares as compared to its 10-day average, and the total volume surged about 150% at 69 lakh shares as compared to its 5-day average. Reliance Communication, the last and final stock to watch out for, it was up 33.5% yesterday and saw delivery buying in excess of 200 crores. The delivery volume surged 43% at about 8 crore shares versus the 5-day average, and the total volume too surged about 85% at 87.5 crore shares as compared to its 5-day average.
The Board of Market Regulators SEBI will meet today to undertake a slew of market regulation and get approvals for the same. As per SEBI's agenda, the regulator will look at proposed framework for the listing of security receipts by asset reconstruction companies. It will also look at the shareholding and governance standard in mutual funds. Not only that, it will also look at the framework under which credit rating agencies are functioning in the country with respect to and it will likely to comment on the cross-holding structures if allowed in the credit rating space. The regulator will also come out with the disclosure standard for companies, especially listed companies, with respect to default of loans, interest payments of securities or long-term loans. It is looking at giving more access to easier access to foreign portfolio investors, and as part of further measures to ensure that many of the newly listed companies can meet the minimum public shareholding guidelines. It will look to ease some of the regulations and ensure that new ways of fundraising or dilution can take place. The entire board meeting is expected to start at 11 a.m. in the morning, and SEBI is expected to brief the media at 4 p.m. in the afternoon.
Well, we've already told you most of what you need to know going into trade, but there are also a couple of stories you probably find interesting on the website, bloombergquint.com. First up, a group of ministers tasked with finding ways to explore state-run Air India's divestment has decided to create a separate entity to pool in the airline's working capital loans and non-core assets. Also, Tata Consultancy Services will have to defend itself at a US trial over claims that it's biased against American workers. A federal judge in California on Wednesday rejected a request from the company to dismiss a 2015 lawsuit accusing it of violating anti-discrimination laws by favoring South Asians. Let's now listen in to Rakesh Bansal of RK Global on where he sees the Nifty going forward.
If you talk about Nifty, then I don't think Nifty is going to go down below 10,450 levels, and the chances of Nifty rebounding above 10,500 levels in tomorrow's expiry session is most likely, and I am expecting expiry around 10,540, 10,550 levels. The cause of the concern seems to be only I am worried about the Bank Nifty, because here we have seen a closing below 25,500 levels. As of now, I'll stay away from Bank Nifty until unless Bank Nifty trades above 25,600 levels. Then I think one should look at Bank Nifty. Else, I feel the chances of a rebound above 10,500 level is most likely. And I'm saying this because if you look at the most F&O stocks, then I'm not able to locate any stock where I could go short or I could suggest short selling. 2-3 stocks like IOC, Jubilant Food, where we have seen some kind of a long unwinding. Else, it appears to be more case of a profit booking, and I feel like we are going to see like uptrend is likely to resume in tomorrow's trading session.
That's all you need to know going into trade today. Indian Open is up next and it'll take you through market opening. Thanks for watching. This is Bloomberg Quint.